Alright, this should work now. Let's see. Can you go on Instagram and see if you could see me on live? And if you could hear me? Last time I couldn't hear, nor could I see. So it was very, very tragic. Now, now is it echoing too? That's another thing I need to know. Is it echoing? No? Good? Alright, we're good. We're good. We're good. Shout out to the production team. Alright, now let's go over some earnings reports. Let's get the Discord open. Let's pull up Sophie. Let's see what Sophie has going on. They beat earnings pre-market, taking off. So if you were trying to get on that move, you probably missed that already. You could ride that train up until about, I got a level on it at, what was this? 958. I threw a price level in there. Right now it's at 939. Yeah, I wouldn't try to jump on that unless you want to hold them long term and you have a long projection on them. I would not play Sophie earnings. Let's look at the daily. Yeah, they made a big jump back up from 786. Came up to 939. Look at that. They probably top out right here at this $10 level where they topped out in the end of December. So that's Sophie. I know a lot of people like them. They're a tech company, software and tech company. Let's look at I don't care about Alliance Bank. F5, no. Let's check out Pfizer. Pfizer's a big one that comes out tomorrow. Let's see if we can get some good price levels for Pfizer. Alright, Pfizer. I don't trade them. I don't have that many price levels set on them, but we could do this really quick. It's nothing to set some levels once you know how to do it. So 2670, it should be able to catch support there if it pulls back. If we push up on Pfizer, you're going to be looking at 2858 followed by potential push up to this next cap right there at $30. Risk reward, I'm looking at a potential drop down to 25 or 26 from the 27, or a potential push up to 30. So you're looking at a 27 to 26, let's say 27 to 25, 50. That'll be 10% loss. If you go up that same amount, 10% gain. So the risk reward is pretty even on this, going up and down. They report after close today, so keep an eye out for Pfizer. I mean, before open tomorrow. I said after close today, before open tomorrow. I'm sorry. UPS. Let's see what the UPS boys are doing after they gave all those drivers a raise. Let's see how UPS stock is doing. UPS has been on a downfall. I had price levels all the way up here at 170 for UPS. They haven't even been back up there since August 2023. Yeah, UPS has been having a rough go at it. Let's look at their support level. The heaviest support they have right now will probably be right around where they are, no lie. 156.75. They're hanging right around the support. And they have earnings tomorrow. This is a make or break for them. They can either break down. If they do a breakdown, you may see UPS go down to, it really shouldn't drop much lower than 153.60. But if it's a real breakdown, if the numbers really don't come out in support of that, we could see them go down to 151.60. So UPS 150, 160. If they have a good earnings report though, they could break from 157. They could start pushing back up. They'll hit a little resistance at this 160 level right here, 163.74, and then they'll probably retest this 170. 170, 157, and 170. That's a almost a 10% gain right there on that move. Now the options contract, of course, is going to move way more than 10% depending on what expiration you buy and what in the money, out the money call or put. If you need to learn more about options, you need to join the Culture Shock Investment Discord so I could teach you about options and how to really profit and make extended gains and protect yourself against losses in that game. UPS. Do I think they're going to hit or miss? I think UPS is going to. I don't know. Let me look at their previous earnings. I don't like throwing out random guesses. Let's look at their previous earnings. Let's look at the financials. Go to the earnings. So they've been hit on every earning since Q4 2021. They haven't missed the earnings report. So this Q4 jump is usually a big jump because of the holiday season for UPS. So they should be able to hit these numbers. But there's also a call out there saying there was not that many people shopping this year, especially online shopping. There wasn't many packages being shipped during the holiday season. A lot of people were using 4Pay this year, so that's how a lot of holiday purchases were being done on that credit, the 4Pay system. So we'll see how that comes back to haunt people over the next year. But let's see how UPS does. They have earnings pre-market tomorrow. I'll be watching. Like I said, if they beat, they could easily jump to 163 and then push their way back to 170. But they have a lot of selling resistance back here between 163 and 170. So be careful there if you want to do UPS trade. Let's go through the list. What's another name that jumps out at me? Let's do pre-market tomorrow. JetBlue. JetBlue just had that deal fall through. So let's look at JetBlue. Because they were supposed to be. Let's see. Let's see what they say about JetBlue. JetBlue has missed their last earnings report, but they hit the three previous. They missed the last earnings report pretty bad, too. And that's when they took that big fall, that big tank. I think JetBlue can go back up to 650 pretty easily from where they are. But if they miss these earnings, we'll probably see them settle somewhere down here in this 465 range. So if you want to play JetBlue, 656 or 465 from 540, you're looking at $1 to the upside, $1.10 to the upside, less than $1 to the downside. So it could be a decent risk reward unless it really tanks down into the low $4, $3 range, which could happen. But let's see. I'm not a big fan of JetBlue, so I can't even really vouch for them in any kind of real way. Marathon. There's a lot of Marathon gas stations out here in Miami. Let's look at Marathon. Let's see. Is this them? Yeah, here they go right here. They're at 160 right now. Okay. So you're really sitting. Let me see. Are these all-time highs for them? Yeah, they're sitting there. Yeah, they are. They ain't never been up here. Okay, Marathon doing their thing in a struggling oil industry right now. I might have to add them to the watch list. Let's look at this. This is why it's good to go through these reports. You sometimes stumble upon some gems. Marathon, 150 is a support level could find. And then you're looking at 156, pretty much another support. And coming back down, we'll come down until about, we'll pull it, say, 144. And if it has a really bad report, let's see, we can see them come back down to this level right around here, right at 136. To the upside, I have no idea because they're at all-time highs. If they have a great earnings report, I really have no area of resistance for them. And that's the thing with companies hitting their all-time highs. Like, you can have a company hit an all-time high and go another 10-15% past that. So you can't say that because a company hit its all-time high that it's time to sell. Because some people feel that way about all-time highs. Like, oh, hit an all-time high, it's time to sell. Must be a pullback coming. If you look, probably 8 times out of 10 when a company hits its all-time high, it pushes like another 10-15%. Similar to ETFs like the SPY right now, hitting all-time highs, but the SPY keeps pushing up. Eventually it would exhaust, but that initial all-time high break is not going to exhaust from there. It's probably going to keep pushing. So let's go down. Let's see. Let's look to the big dogs. After close tomorrow, we got Microsoft. Microsoft, I already got Microsoft pulled up. That's my baby right there. I love Microsoft. Microsoft. Microsoft reports good earnings, which I believe they are going to because they have open AI infrastructure. They've been incorporating a lot of new technologies into their cloud service for servicing businesses, integrating the AI into those programs. And Microsoft is a cloud computing monster already, so that's just going to accelerate their growth along with encouraging their current business partners to expand into these larger AI packages that are going to be more efficient and probably is leading to a lot of the layoffs you're seeing with some of these companies that are incorporating this AI into their workforce. So you're seeing a lot of companies lay off 1,000 people, 10,000 employees here, 2,000 employees there. That's because these technologies are coming in and they're much more efficient and they're much cheaper to operate over the long term versus paying an employee, having to give them health benefits, retirement, all that kind of stuff. They just pay the machine, buy it one time, or put a payment plan on it. Once it's paid off, it's paid for, and the labor is there continuously. So just keep an eye out for that. Now, Microsoft, let's give you some levels. Microsoft similar to Marathon. If it beats earnings, I really can't call where it's going to stop. I'll go a little deeper for y'all. Let's go to my weekly chart. Let's see the range on Microsoft. Gotta stretch this thing out some more. Stretch the chart out. Okay, there we go. Now, this is my weekly chart on Microsoft. Oh, I did have a level up here. 503. $503. Microsoft's at 407 right now. If Microsoft has a good earnings, yeah, I could see it probably hitting the ceiling up there around the 500s. It may push up to like 450s after a good earnings report, depending on how good the numbers are. But $503 is my level of resistance I have for Microsoft to the upside. That's why I see it slowing down. So let's see though. That'll be beautiful. Oh, that'll be so beautiful. Microsoft goes to 500. I would love that. Let's stick with computing. We got AMD. Let's go to AMD. Let's look at the AMD chart. We'll go to the AMD daily. Let's look at AMD on the daily. AMD is coming into some weakness, but AMD I anticipate is going to have a decent earnings report. Their chip company, chip production has been up. Now they're not in NVIDIA. They don't have those same class chips that NVIDIA has, so I wouldn't anticipate AI causing a massive jump in their chip consumption because I don't think they have the chips that are able to perform on the level of NVIDIA's. So big businesses are probably still opting to buy the NVIDIA chips in bulk. So this could be up and down. We don't know which way this way can go, but if it pulls back, I don't see it coming much lower than this 166.30. And if it pushes up, look for resistance at around this 186 level when it breaks near all-time high again. So those are the two different areas you want to look: 166.30 and 184. Let's say 185 to the upside. All right, so that's $10 to the upside and about $9 to the downside. Trade with your own level of risk tolerance and capability of recovering. Don't overextend yourself into any position trying to gamble, roll the dice, hit 2,000% on one trade. Don't do that to yourself. You'll just burn yourself. Trust me. Been there, done that. Alright, Google. It's another one of my favorites to watch. I don't hold Google long term. I will disclose that. But I do like trading Google. And I do like Google's positioning in the software market and the chip industry. Well, AI in the AI market. Let me not say the chip industry, in the AI market. They're going to face a lot of competition with ChatGPT, but I think Google has enough market share that once they introduce their own AI search engine that is similar to functionality of ChatGPT, that they'll be able to retain their dominance in the search engine field at least. Let's see. So Google reports some good earnings. They're around all-time highs as well, but I do have a range on them. So let's see if Google pushes heavy. They're probably going to stop somewhere around this 168 level. 167.50. We'll put that as a ceiling on that push up if they have a great earnings. And if they pull back off of a weak earnings report, we could see them easily come back to this 142.80 level. 142.80, and that could be followed by a 137 pullback, but it should definitely catch support there. So that's Google for you. Starbucks. I don't drink too much Starbucks, but let's look. Everybody loves Starbucks. Starbucks has been struggling, it looks like, a little bit. Let's pull up the weekly. Yes, Starbucks is trading at the same price it was trading in. Let's go back here. November of 2020. November of 2020, Starbucks is actually worth more than it is today, which is signs of a bad company. I hate to say it like that, but that is. Over a 2 or 3 year span, you definitely want to see a company that is strong on a constant uprise. So yeah, it's going to have downswings and pullback, but it should ultimately be on an upward trend. When you zoom out, the further you zoom out, it should be on an upward trend. Now, if we look at Starbucks on the monthly, I'm pretty sure Starbucks looks a little better on the monthly. You know, you see how it has that constant going up, even though it stalls out and stops, it constantly goes back up. So we may be in one of those periods like this right here for Starbucks. That period could last. That lasts from 2015 to 2018 though. So that's 3 years of no growth. So Starbucks shows a trend of being able to do that, give you 2, 3 years of no growth. Right now we're about a year in, so you could get 2 more years in. We're about 2 years in, so you could get about another year of no growth or steady sideways growth before we have that next breakout. Kind of like how I did right here. Steady sideways growth and then boom, broke out to this next level. Alright, so let's go to the smaller chart now since we're just talking about earnings. But you always want to get a big picture, see where the company is at, get a good feel of how its overall performance has been looking. Gives you a better way to predict their earnings and which way they may be going. So, Starbucks. If you were going to trade Starbucks earnings, I would be taking profit once Starbucks gets back up around this 96.88 range. I would take profit up there. And if you were trading it to the downside, you could look right around this $89 level. Let me see if I can find one that's lower for you potentially. You could, but it'll be higher risk. Definitely more likely to bounce right off of this level right about here. 88. So $89 and $88 are strong support for Starbucks. So You don't have too much room to the downside on this trade if you want to trade Starbucks earnings to the downside. And let's see, Starbucks has beaten their earnings the last 3 quarters. So play it as you like. Kanoko Phillips, I'm a little bit interested in Boeing. Boeing is on Wednesday. Boeing has been going through a lot of shit lately with the whole Alaska Airlines debacle, and damn plane door coming off in the sky. And honestly, the year before that, I remember right around the pandemic, Boeing was having a lot of issues as far as manufacturing and reliability of their parts, and that was around the beginning of COVID. um, Boeing has a monopoly though. That's the problem with Boeing. They have almost a monopoly on manufacturing the planes. There's not that many other companies that manufacture on a mass scale that Boeing does with commercial airliners, so on and so forth. So that's been pretty much keeping them in their lane of dominance, even though they've had all these issues. They've been able to hold this support right around. I got a level on them at like $204. Oh, $193. I'm sorry, $193. Yeah. They don't seem to break down too far below there. Right now they're at 200. So even if they do have a bad earnings report, I see them catching support somewhere around this 185 level. The lowest they'll pull back if they don't get stopped up at 193 or supported here. So you got about $10 to the downside, but if they have a decent earnings, which it could happen because of the increase in travel over the holidays, and you could see them come back up to this 217 range, and then they can continue to rally from there as long as they continue to fix their issues. Due to them being a monopoly, there's really no one that's coming in to take that large market share from them. So all they got to do is show that they're fixing their issues and trending in the right direction, and then the stock price will start coming right back up again. How long that would take, though, I don't know. It's up to the general market how they feel about Boeing and what the CEO says and what the responses are to the Alaska Airlines, what actually caused the breakdown. They're doing a whole investigation into that. So once that is revealed, if it was a manufacturing issue, if it was something else, if it was the metal, they'll dive it down and they'll be all over the place, I'm sure. But at that point is when Boeing will probably start its serious decline or serious recovery based on the releasing of that information and what they say happened. Let's look. MasterCard. I'll take you out of MasterCard real quick. We could do MasterCard. MasterCard. I like MasterCard. Now, see, this is the type of weekly chart you want to see. Let's stretch this up some. Let's close this in. So, you see, well, MasterCard went through a large consolidation period in time. What was this from? This was from August 2020 till about March 2023, and then it started breaking out. So right now it's in the process of an early range, early breakout. So it consolidated all the way for about 3 years until March 2023. It stayed in the same. Consolidation means it stayed within the same range of prices. It didn't really break up and break down. It just traded in a range. So now it broke out of the range. As you see, this was the range, the top of that range, 393, and it broke that back here on August 2023. So, we had a little pullback below, and now we're pushing back up. So now we have 437. I know everybody understands how much credit card debt America is in right now. So the credit card debt is paid back to the credit card companies with interest, which is typically the formula that works in benefit of them, as long as a whole bunch of people aren't defaulting and not paying back their loans, which doesn't tend to happen too often unless there's some major financial crisis going on. Then these companies tend to continue to grow. MasterCard, if you're looking to play them on its earnings, a quick pullback. If they miss, you could see them pull back to this. It'll probably stop right here for sure. Looking at 419 on the pullback, and because they're near all-time highs as well, I'd say add a good 5 to 10% onto the top of this price. So at 437, 10% would be like another $43. So that'll put them kind of right around 480. You could have 480 as a potential level they may push to after earnings if they have really strong earnings report. So that's the range on there. That's a really wide range. I would be careful playing that if you do want to trade MasterCard. That range is really wide. It could go anywhere. Then let's see. We have. I'm not going to do Qualcomm. Let's skip to Apple and Amazon because I know that's what everybody wants. Give the people what they want. Alright. Apple. Apple. Let's go to the Apple daily chart. I have a lot of levels on Apple. It's one of my long-term favorites right here. Alright. If Apple misses on earnings in any way, significant way, that's going to pull back the whole market. So this is why this is significant. Apple and Microsoft. Microsoft can push the market, but Apple can end up pulling in the opposite direction. And Apple is a heavier holding of the S&P 500, so you'll see that have more of an impact than Microsoft. If Apple does pull back, I don't see Apple pulling back any further than this 180 level. I have a level down here at 179.20. 179.20 will be a pretty steep pullback for Apple, and that would have to result in them having a terrible earnings from the issues they're having with the Apple Watch licensing, maybe iPhone sales. I don't think the Vision Pro sales are going to be rolled into this quarter's report, so that's not going to impact this quarter, so you won't see those until next quarter. But yeah, as far as the issues they've been having on a global scale, those may start showing up in these numbers if they didn't have a good holiday season. So these earnings are pretty much going to tell you how good these companies all did throughout the holiday season. But if Apple hits, Apple could go back from 190 where it's at now. It could easily start to retest that 198 level and start rallying like Microsoft has been. But even with people being down on Apple, it's still holding this 190 price range that it's been floating around in. Since it broke into it, it broke out of it really quick for a few days, maybe a week back in, but it snapped right back into the 190s because people love Apple. People love Apple long term. They're Titan. They have a lot of ownership, and they have their hands in a lot of areas. They're even talking about getting into car production by 2030. So I think the biggest thing holding them back was the automated driving systems. They were trying to figure that out. But now, since it seems like no one can figure that out, not even Elon Musk and Tesla are figuring out the self-automated driving system. Seems like they're putting that to the back burner, where it's not going to be all fully autonomous driving cars is not the push right now or the hype. It's more so partially autonomous, where it could kind of drive itself and do certain things autonomously, like parking. But full functioning driving, you there parking, all that autonomously, we're not there yet. So Apple's like, hey, if we're not there yet, and that's not what everybody's expecting, let us jump in the game and start putting our vehicles out on the market. So look forward to your Apple vans and Apple coupes by 2030. I might cop one. That might be fire, actually. I gotta see who they partner with as far as production now. Alright, so Amazon. This is my next favorite. Amazon has been on a tear. Amazon is a behemoth in the retail industry, man. And they expand into so many other things like cloud software. They're industry disruptor. So this AI industry, they're going to disrupt in that industry as well by selling people the pieces that NVIDIA uses to make their AI chips, or the base chip that they use. They're selling that to the public market for people could, customize it as they see fit. So now you're putting the product in the hands of the people and seeing what they can create. And a lot of the times when you do that, you usually end up with something amazing in return, because people are brilliant. People are stupid, but people are brilliant as well. A lot of brilliant minds out there. So Amazon earnings. I do have some levels up above this. So Amazon, we could push up to 170 if they have a really strong earnings report on Thursday. Yeah, Amazon comes out Thursday after close. If they pull back though, 153. It depends on how bad the earnings is. 153 will be support level 1, and then you got support level 2 at 147. 147.40. So look for those three levels. 170, then you got 153-ish, 153.80, and then you got that 147 level. Alright, so those are the three levels you're going to look for Amazon. And then we have Meta. Ooh, this is a big week. The markets ain't going to go nowhere this week. I'm telling you, it's going to be a choppy ass week on the SPY. So if you're trading out there, good luck. I probably will not be trading heavy this week. I'll wait till next week after all the numbers have come in and the general direction of the market has been decided by these huge companies' earnings. Then that's the wave I'll ride. I don't have to be in and catch the big jump. You know, some people want to try to catch the big jump. That's how you get a big smack too. Or your portfolio gets chopped in half because you wanted to go hard trading earnings, thinking that you knew the future, and then a company beat earnings, but their future projections come in shorter than what the economy was looking for, and then their stock price tanks. So you had half the equation right, but you didn't know the other half was coming. So that's why I don't mess with earnings like that. Nvidia earnings did do me great though. I don't lie to you. But Nvidia to me was like a no-brainer. It was like Nvidia chips. They're the only ones they have proprietary ownership over those AI chips. AI was a big thing coming out. So it was like if you have that much behind it, then okay, I say take the risk. And even then, don't take a heavy portfolio risk. But then you could play earnings. But if it's like up in the air and you're like, oh, it could go this way, oh, it could go that way, depending, don't do it. Wait until after. So, Meta, Facebook is at all-time, I don't know, all-time high, $400. Shit. Facebook came back, boy. Facebook was in the dumps. Look at this. Look at this chart. Look how far Facebook dropped off. You can't even see it where it went. That's how far down that shit went. You gotta bring the chart all the way down. Facebook was trading around this 380 level back in September 2021, and then they tanked. By October 2022, they were $88. You could have got Facebook for $88 in October of 2022. Now they're at $400. I could have got Facebook at $88 in 2022, and now they're at $400. You don't see that in the market often. I think we're getting spoiled because we have these high growth tech companies and a lot of new technology being introduced, but this is a real moment in time. This is like a moment to be alive because this does not happen often. This much new introduction of new technologies, new whole entire fields of investment like crypto. These things are being created now, and we may have a rush of that happening over the next decade or so. But after that, we're going to go back into that level of normality where we're just innovating on the things we have, building on top of them, and using those. It's not going to be like a whole new technologies introduced, a whole new currencies introduced. No, this is one hell of a time to be alive. A lot of wealth transfer going on right now. I want everybody in the black community to be a part of this wealth transfer. A lot of money switching hands that is not in a very controlled, organized fashion because the money is switching hands between old and new technologies. It's a shift into a new guard. So a lot of that old money was very hesitant to get into these new technologies. So that leaves the opening for us to get into them before the old money comes in and starts inflating the industry up and taking over ownership as they're doing with crypto right now. You know, institutions at first they talk it down, try to squash it out. They see it's not going anywhere. Wow, this really is a new industry. Now they're going to regulate it and now they're going to take it over because they got the capital to do that. I think they already have over a million Bitcoin, I believe, inside of the BlackRock ETF, spot ETF. So, oh no, I'm sorry, over 100,000 coins already, Bitcoins, full Bitcoins inside of their spot ETF. 100,000 coins already, like, that's crazy. They only been on a week. They've already accumulated 100,000 coins from the masses and have underneath their ownership. And in exchange, they're giving you a share of their spot Bitcoin ETF. And then using your capital to buy coins, which what I suggest you do. Just buy the coin. Instead of buying the spot Bitcoin ETF, just buy the coins. Unless you're in a position where your company or for some reason you can't buy Bitcoin, just buy the coin. Why buy the ETF? I don't understand. I personally don't understand that. I understand it for the standpoint of retirement accounts and hedge funds being able to invest now. But for people like me and you, it really doesn't make that big of a difference. You know, we can invest in the coin directly. Just buy the coin directly. Have direct ownership. Do not own something via someone else owning it. Anytime you do something that way, it can work out for liability and legal purposes in some cases, but in this case, it doesn't make any sense to do that. You want to own it straight up. Own the Bitcoin straight up. Alright, so back to Meta. Sorry, I had a Bitcoin rant. So, Meta, 400. We'll give it a 10% past that for potential growth after earnings. So that'll put it at like let's say 440. I'll put 441. That's fine. Whatever. There's no levels up there right now. And on the pullback, it should be able to cast support at 383. And then ultimate support should kick in at, unless they have a really bad earnings report, 346. But I say around 383 if they have a bad earnings. They shouldn't pull back much further than that. 383, 370. Alright. And let me see if there's any other names on here that are standing out to me. I'm gonna look at Skechers just because Snoop is part of Skechers now, and I saw him talking about it. So let me see how Skechers stock is doing. Let's see Skechers. Look at Skechers on the weekly, man. Skechers $63. Let's close this chart and some more. Let's put it to the monthly. I'm sorry, the weekly. Okay, I like to scroll back and see no bars up in this range, which means it's continuously making new highs. Because if you have candlesticks in the past and it's all the way up here above where it's at now, that means at some point it pulled back and it's just coming neutral to where it used to be. So I want to see this continuous growth. Alright, look at Skechers. They had a big push back in 2015. I gotta look and see what happened here. They had a big push in 2015 and then they tanked. Tank. And they tanked all the way. They tanked all the way up until the end of 2016. That was terrible. That was a terrible price pullback. They went from $50, they came down. They lost about 50%. They came down to $23. But look at them now, $63. It was a long ride back up, but they got back up there. So I guess Snoop partnering with them may do something for the basketball line that they have, make some players want to wear it, because Snoop and his affiliation with the hip-hop community and the black community may be enough to persuade some of these basketball players to also jump on and endorse Skechers. And like he said in the interview, you know, people don't wear Skechers just for sports. People wear Skechers everywhere. Nurses wear them at work, workers' shoes. They're cheap, you know, they're comfortable. So I understand the niche market he's going for. Smart. Not trying to go for the high end like Jordan or Jordan basketball shoes or Nikes. They're not going for that kind of class. They're looking for the worker that needs shoes to go to work, for to work at Walmart, Target. They just need something comfortable to have on their feet. But they also wanted to be stylish as well. So you can see Skechers making a play. They have earnings coming up Thursday. So let's go to the daily chart on them. Skechers can pull back to $55 and we'll give them a 10% increase. Let's say they could be stopped out. They could get resistance around 71.60, we'll say, if they beat earnings. Alright, so that's going to be it for the earnings plays. I gave y'all some good price levels to watch for on all the major companies that are reporting earnings this week. Should be an exciting week. I don't think the market's going to move too much. You may have some little jumps and pullbacks after these reports come out. If we're going to get movement, that movement is going to come Tuesday after close when Microsoft reports, and then Thursday again when Amazon, Apple, and Meta report together after close. So by this Friday, we'll have a good idea of what the market is doing, what the market wants to do, and we gotta see. Oh yeah, Jared, we going to new heights. Appreciate you coming through, bro. I just saw the comments. Yes, sir. We're gonna keep expanding, accelerating, and expanding the brand. Make sure you guys share, follow, share the space, and let's make some money together this year. Join the Discord, follow the YouTube channel, Culture Shock Investments, on YouTube, on Discord, TikTok. You can find us everywhere, Culture Shock Investments. I hope these price levels that we gave helped out with what you maybe wanted to look for in earnings this week. And we'll be back on next week. Let's go over how these earnings played out, and let's go over those price levels we set. I'll see how good my ranges were. All right? All right, y'all. See you next week. Peace.